Welcome to Fear and Greed, the week ahead. I'm Sean Aylmer, and as always, I'm joined by economist Stephen Koukoulas. You'll find him at thekouk.com, Thekouk, thekouk.com, and on Twitter using the handle thekouk. Stephen, good morning.
And a good morning to you.
Has your nickname always been the Kouk, Stephen Koukoulas?
Largely. I've been called worse things, but it was really my daughter set it up for me many years ago because, a long story, but it was sort of Stephen at the Kouk. And when I was setting up my little business, I thought, well, that's sort of cute and funny and, don't take economics too seriously. So, yeah, the Kouk. And as you know, I sort of call it loud and straight and without fear or favour. So there we go.
It's pretty good. So not a lot this week, but let's talk about last week because there were a couple of really interesting bits of data as well as some information from the Reserve Bank. We had the Reserve Bank minutes. We had the wage price index last week. We also had labour force stats where the unemployment rate jumped probably more than people thought. What did you learn last week?
Yeah, well, going to the RBA minutes of their board meeting, remember that was the one that shocked most of us in the beginning of May with the 25-point hike when virtually nothing was priced in. And so reading why they decided to hike rates was particularly interesting. And if we boil it down, it was a close call. They acknowledged that they did debate between either keeping them on hold and waiting for more information to come through on the economy or to go 25 points and hike them and let the inflation rate sort of tilt further down because of that tightening in policy. The issues were to do with, in no particular order, some resilience in the labour market. So they were saying that the labour market's strong and wages growth was solid. They said the rebound in house prices was something that was going to add to household wealth if it continued, and that was going to be an offset to the slowing in consumer spending that we had been seeing. So that was the other reason. And they focused on services inflation. While we know goods inflation is coming down, so the supply chain issues which relate specifically to goods, it was services inflation that was a little bit more resilient. They thought, well, we could hike once more and try to just stamp that inflation risk out, and that's what they did.
So when you take the labour force stuff from last week, though, what's that telling us about the economy?
Well, they were surprised too, but to the downside. And it's curious that the RBA did cite the tight labour market as one of the reasons for their hiking decision. However, what we saw for the wage price index, which is sort of a comprehensive measure of labour costs. It's not actually the dollars and cents that you get in your pay packet. It's more an inflation driver, unit labour cost, without getting too particular. Anyway, it showed an increase in annual terms to a 10, 11-year high of 3.7%. But we had the quarter-on-quarter figure coming in only at 0.8%. So if you annualise the 0.8%, you're getting around about 3.25%. So there was something for everyone in it, in that wages have picked up, but they're not accelerating to the point that would cause anybody, including the Reserve Bank, in my view, any concern that wages were going to be feeding into inflation. And then on Thursday last, we saw the April labour force data. And surprisingly, we saw a drop of employment of about 4,000 in the month. Now, month to month, those numbers are incredibly volatile. And yes, we had a big increase in the prior month. So maybe on reflection, there was some probability that we'd get a weak number. However, not many people were forecasting it. So that took the markets by surprise. And as you touched on, the bigger issue was the jump in the unemployment rate, 3.7%. So at one level, that's pretty good still. Anything under 4% is a good, nice, low unemployment rate for Australia. However, it's gone up from 3.4% towards the end of last year. The trend is rising, and as we know, it's a lagging indicator of the economy. So, if we've got more evidence that the economy is cooling off, then we're in the early stages, in my view, of the unemployment rate moving higher.
Okay, this week, what's out of interest? Retail sales, that'll be an interesting one.
Yeah, the only item of note in the domestic data set is the retail sales number for the month of April. Now, we've got to treat this number with a huge amount of caution, as we always do. The ABS try to seasonally adjust it, but the timing of Easter, and we know Anzac Day, and I know that sort of is there every year, but there's still a change in spending patterns that occurs in the retail sector with Easter, with Anzac Day, public holidays, and these sorts of things. However, it's pretty clear, and from the bank internal data on their credit card transactions and the like, that it's going to be a soft result. So the market's probably looking for about flat in dollar terms for the month of April. Anything weaker than that will sort of confirm that we consumers are hunkering down, the economy is slowing down, and, dare I say it, cost of living pressures are sort of causing a jigging of our spending patterns. And of course, interest rate hikes are causing us to have less money to spend in the retail sector. So, yeah, it'll be a soft result. It's a question of how soft will it be.
It's not necessarily a bad thing, though, is it, if we actually start spending a little less?
Well, that's how interest rates work. The Reserve Bank would be very happy to see the slower growth coming through. One of the reasons why they've been hiking is to slow the economy down, to get inflation going down. And in fact, when you think about it, if retail sales are weak again, let's say, you're a retailer, be it a big grocery supplier or even the corner store, if you like, that if people aren't coming into your shop, then your willingness and ability to pass on higher prices is not there. You may even consider discounting to clear your inventory or something. And by definition, that is lower inflation. So that's sort of the mechanism. So the RBA will be hoping, internally anyway, that we see a soft retail sales number, because that actually helps them in their quest to get inflation lower. Now, they don't want a recession, but they just want us to pare back our spending. And that appears to be what we are doing.
It's good news, Stephen. Have a great week.
Thank you, Sean. You too.
That was economist Stephen Koukoulas, better known as The Kook. You can find him at thekook.com and follow him on Twitter using the handle The Kook. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.